Today we're here to discuss about our working group digital currencies. It's fantastic to have a former lead of the working group and the current lead of the working group. So delighted to introduce you, Lisa from Ardeshir Goddard and Natalie Travis Smith, both partners at your respective law firms and very much committed to the digital currencies agenda. I think that's like great opportunity to deepen a little bit in what the working group is doing right now. So Lisa, you've been starting as a new lead very recently. So let's talk about stablecoins. I think it's one of the most pressing thing. How do you see that developing? I mean, what's new?
Yeah, certainly. So in addition to the use cases around on and off ramping, there's the cross-border payments rails that we're all talking about, the payment opportunities cross-border. There's also the opportunity with in-house treasury functions in the use of stablecoins and the use of stablecoins within trade finance. We're seeing a lot of that. And then the other point to mention is very much around settlement use cases using fiat-backed stablecoin. Of course, if it's asset-backed stablecoin, there's huge question marks around settlement finality. So there's lots of use cases that are arising that are currently being tested by the regulator and industry, and we're yet to see kind of what the front runner is. But there are very good discussions at the moment between the regulator, industry, and ourselves.
I think it's fantastic, but it's also like sometimes not really fully understood and grasped by everyone. You know, sort of regulators seem to be a little bit behind where the industry is into the understanding and the exploitation of all of these various solutions. Natalie, in your experience, what can you say that, what do you think has been holding back?
I think there have been a few things that have been holding back particular use cases, actually. I think, as Lisa said, we've obviously seen stablecoins used for a long time now in kind of the crypto trading world, but we need to do more to unlock other use cases, one of which is their use as a settlement asset for tokenized securities or in the tokenized markets. And I think two things really are holding back that market now. Firstly is that we need to modernize the legal and regulatory regimes so that they are fit for purpose for the tokenized financial markets of the future. For example, Lisa's already mentioned settlement finality, but we also need to update things like the financial collateral arrangements regulations as well, because until we do that, the trust in the markets won't be there to adopt stablecoins as a settlement asset in the wholesale financial markets. The other thing, I think, is that, of course, it's great that we've got the digital securities sandbox now. And actually, finally, we're allowing stablecoins within that sandbox, which obviously took a while, but we've got
firms,
it.
Right? Yeah.
Yes, exactly.
Great, yeah.
However, what we need to do, those sandboxes do two things, right? So firstly, they allow institutions to test and develop their business models. But actually, they are also a key mechanism for the regulators and supervisors to look at those business models and see what needs to change in law, in regulation, to make sure that they are fit for purpose for innovations of the future. And my ask to the regulators and supervisors is, let's not wait till the end of the sandbox in 2028 to make those changes that are needed. Let's do it now.
Yeah, let's do it now. And I think that things that we should look at, and you were saying, problems around settlement and things like, how are we going to be competitive and attractive if we have some proposals? I mean, these are still proposals at this stage, but we can see that some proposals do not go into the direction of creating a really competitive and attractive framework. And, we may not be really late and behind the curve with other jurisdictions, but we're definitely not going to go into the right direction of travel. I mean, at least this is my opinion. What do you think? Both of you, who wants to go first?
I'm happy to go first. So firstly, the UK and US are moving at a pace. Yes, we expect new regimes in 2027. And we have an operating regime in the EU. Australia has now published its draft legislation. Hong Kong has moved ahead. Middle East has moved ahead. So we can certainly learn from these jurisdictions. And what we need to understand, and the feedback from industry, has been that we need a flexible, proportionate regime that is going to be attractive for new businesses coming into the UK and existing businesses. So that proportionality and flexibility, it doesn't mean that everything has to be perfect from day one. What we need to do is have a sensible structure in place, and it could be revised later down the line. There could be further enhancements, as with our existing regime. So I completely agree with Natalie that we shouldn't wait to see and understand the evidence in 2028 from the use cases that are being tested by the FCA, but we should really start preparing now.
I couldn't agree more. I think the other point is if we want domestic focused use cases for stablecoins, we need a sterling denominated stablecoin. And we're only going to get that if we get the right regulatory regime in place. And I think the main issue that we have at the moment is this is not about whether people will use stablecoin. This is which stablecoin they will use. And we need to be in the race.
Absolutely. And I think that, and we're going to touch on that in a second. But before we're going to go back to the GBP stablecoin, which is very important, I wanted to ask you, what are the parts of these proposals that are effectively damaging the competitiveness of our system? There are many things that do not work. So can we articulate that better? Because the working group is doing a lot of work, and there are also conflicting interests in there. We can see the banks do not always agree with other kind of parts of the membership, but the world is going stable coins, and even if here we are going for tokenized deposits, still the use cases that stable coins cover are completely different. And I don't think that everyone has this clear.
Yes, I think the first point to mention is to really understand what the end user expects. So the different types of opportunities that are being provided to them through stablecoins, CBDCs, tokenized deposits, enhancements to the national payments vision. With respect to stablecoins, there are vast benefits for the end user, and restricting holding limits, the backing ratios, looking at that a bit further would probably open some doors in terms of opportunities for businesses to provide better benefits for the end user. And one question that has always been discussed is the rewards and interests. That has been discussed quite heavily in the US. The discussions here are similarly so. There are going to be ongoing discussions to make sure that there's a balanced approach. Yes, we need something flexible and proportionate, but the cautious nature, I do understand from the regulators. However, does that mean that we then deter certain businesses from developing in the UK? And that is something that everybody does understand will happen if there's a lack of flexibility.
Natalie,
I think we've also got the complicating factor, haven't we, of having the two different regimes. So if we start with the FCA regime first, that has been based on an investment banking style regime.
For who listens from home, the two different regimes, one is for systemic and the other one is for non-systemic. The FCA is the non-systemic one.
Yeah, so for non-systemic stablecoin issuers, for example, you would fall within the FCA's regime first and foremost until you become systemic. That regime is very much based upon the investment banking style regime that we have in the UK. So there are a few things that I would say are constraining developments in this area. One is we have not yet tackled the use of stablecoins as a payment instrument, and what amendments might be needed to be made to that regime to make it more proportionate when only used as a means of, when stablecoins are only used as a means of payment. Instead, we focused on their use for a broader range of financial activities, including things like investing in stablecoins. So we need to fix that first and foremost. The second is for any firm out there who is not already authorised under the FCA regime, do not underestimate the amount of work and compliance uplift that is going to happen to fall within this kind of new banking style regime that you will have to comply with, including things like prudential rules, which is a very high bar to entry for especially new entrants to the market. Moving on then into the systemic world, we've already mentioned we've got the holding limits that possibly are literally a constraint on growth.
Also, we're the only jurisdiction that's proposing this, which is absolutely, I don't know.
Also, we've got the backing asset regime that we have said. Couple that with the PRA's Dear CEO letter that came out, which essentially prohibits banks themselves, or at least from the same banking entity, from issuing stablecoins themselves. And I think this has created a competitive marketplace in stablecoins, which means that obviously on one hand, the banking community is saying, well, why can't we participate in the stablecoin market on the same level playing field with everyone else. And yet on the other side, we've got more startup entities saying, well, wait a minute, the banks already have all of this infrastructure and compliance and prudential requirements in place. They could get there quicker than we could, even if they have to issue from a separate entity. And I think for us to create the utopia regulatory regime, we need to level the playing field for all and make possibly a more staged access to some of these requirements to enable new entrants to the market as well.
And also maybe understand when we become systemic, because at the moment there is no real definition of what is systemic, non-systemic. Like, it's basically a discretionary. Right? Is that
yes,
correct?
I think that's completely right. And I have to say,
the US has a threshold, so why can't we do the same?
Correct. And on this topic, so this systemicness test isn't new. So we've had it in the financial market infrastructure world for a very long time. So you could operate a payment system today and you would not need to be authorised or designated under the Banking Act or the Financial Services and Banking Reform Act unless and until you become systemic. And actually, if you look at the systemic test under those regimes, they look incredibly similar to what we've now introduced for stablecoin, systemic stablecoin issuers. It is uncertain. In a way, it's easier to know whether you're going to be systemic in an FMI world because we have existing systemic FMIs today. So you have that level of comparison. I think the main issue with applying the systemic test to new stablecoin issuers or new systems using stablecoins today is we just simply don't have that comparison now. So more guidance would certainly be helpful.
So there's probably a case to say that for the non-systemic stablecoin issuers, there certainly is a preference for those firms to fall within that bucket for the longest time possible until the regulators then start to have conversations to indicate their systemic nature. That will take some time, as we've seen with the current FMI regime. That is over a course of a very long period in terms of discussions and indications. So there's going to be a number of stablecoin issuers who believe that they are non-systemic until otherwise. And for certain players who advocate for the systemic stablecoin regime, there is a different set of requirements that would apply to them similarly. So I think we just need to make sure that the transition from one to the other is as smooth and as efficient as possible, which is currently unknown.
Yeah, I think that's right. We are expecting, aren't we, a consultation paper, hopefully shortly, that will help answer some of those questions. But I think the transition to the systemic regime and how that happens is key. And of course, I think at the moment, there isn't a stablecoin in issue, we don't think, that would be systemic and designated as systemic from day one. So, for example, indications have been that Tether, Circle, they would not be systemic on day one. And I think that's primarily because of the use case, interestingly, because they're mainly used as the kind of on and off ramp in crypto tradings at the moment. So what we're really focusing on with the systemic test is when do these stable coins become systemic in a payments use case? So when are they widely used for payments in the UK? And I think that's going to be the key tipping point.
What do you think is the risk? Like, I want to be positive. I'm sure that, the Bank of England and all the other regulators will come up with an attractive plan. They've been, constantly engaging, and I'm sure that this will have a positive outcome. But let's put the optimism to aside for a second. Let's think about the worst case scenario. Like, do you think that we may be at risk?
Absolutely. So I've had numerous conversations with clients who are not saying, how do I set up in the UK? They are saying, where should I set up? Because where is the most attractive place for me to launch my stablecoin? And to be clear, that doesn't necessarily mean that there is the least regulation. It just means that it's more of a proportionate regime for those firms to be able to launch and then scale.
Do you see the same, Lisa?
That's absolutely right. So usually the clients would ask for cross-jurisdictional regulatory assessment and comparison of the different regimes and the pros and cons. They would take an assessment from all different aspects, from people on the ground, governance, risk, legal compliance, and so forth, and operations, and then make a determination. But one of the driving factors is the regulatory regime and the use case and where they think there is the commercial viability, the best commercial viability within that framework for the firm. And it may be that some firms would attempt to seek licenses from various different jurisdictions, which is the case, and some would concentrate on a number before expanding. If we wanted to be in that race, we need to ensure that we have clarity, proportionality, and flexibility. Yes, we're waiting on the final rules. We're waiting for further papers. But the starting block is we need to have a regime in place. Similarly, with the current FSMA regime, the PSRs, the MRs, that has evolved over time. This regime will evolve over time. Nothing has to be perfect from day one, and I think that's a misconception.
But we need to have one, otherwise we are losing out, right? I mean, that's terrifying. Good. Well, let's move on to something that I don't think is always clear, and it's very popular now to talk about sovereignty. Who could have thought about it 10 years ago, right, where the world was global? Now we are in a world that sovereignty is back in fashion. What does it mean in terms of monetary, the users of a currency in the digital sphere? What does it mean for sovereignty? Like, we can see that the European Union is using the digital euro as a way to sort of escape US dominance. We can see that here as well, there are lots of talks about, the payments infrastructure, who should own it, who shouldn't own it, what's the role of America and all of that. Like, what does it mean in stablecoins?
I think from a UK perspective, if we had a GBP stablecoin that was used as a payment instrument and it was deemed as systemic, then it would certainly support monetary sovereignty in the UK, as opposed to other sovereignty jurisdictions in the EU, the US, and considering the global political landscape at the moment, the direction of travel should be to support a UK stablecoin issuer.
And, there's lots of conversation here about, we have tokenized deposits, we're going to go for them, and the assumption is they are the same. They're not the same. Can we explain that, Natalie?
Yes, of course. They're not the same. So essentially, a tokenized deposit is simply a tokenized version of your ordinary bank deposit. It is a claim against your bank that you have. In order to make that transferable between the banks, you need some sort of infrastructure in the middle of them. And that's what UK Finance's project is working on at the moment. And also, you're still going to have the same constraints in terms of cross-border use cases when you have a tokenized deposit, because certainly with the initial blueprints that I have seen, there is no equivalent to a stable coin in terms of being able to just freely transport it cross-border. Essentially, you're still going to need the correspondent banking network that you have today, because essentially you will collapse one liability on one side of one bank and then increase it on the other side. So that's tokenized deposits. Stablecoins obviously can be used in cross-border, and actually increasingly it is happening today. We mentioned earlier what are clients speaking about. They are essentially speaking to me about where can I put a stablecoin in my cross-border payments flow to help increase efficiencies. So I think they are different, and the whole point of innovation is to enable more choice, both for consumers in wholesale markets as well, and to enable us to be able to pick the right payment instrument for the right use case. And therefore, there is room for every type of payment, and we should make sure that whatever regulatory and supervisory regime we put in place in the UK doesn't stifle one or support one above the other.
I think that's a very important concept, because we all, share the views of the Deputy Governor, Sarah Breeden, when she talks about the multi-moneyverse. I think this is a very important concept, and having a choice of, multiple different kinds of money will help consumer deciding what suits best their interest. But at the same time, as you were saying, Natalie, we can't put one on top of the other one or privilege one against the other one. And that's because also the use cases are different. Like, I mean, if we want to be able to have also give a role to the pounds in the digital world, we can't not have stable coins. Otherwise, outside the UK, no one will be effectively able to use it because they do not have access to our banking system. So tokenized deposits are for banking system users. But if we want to go beyond that, and that's what having more forms of money is about, it's also essential that we have GBP stablecoins.
Yeah, and let's face it, stablecoin use case, particularly cross-border,
What could be the advantage of the usage of the role of the pound beyond the current sort of...
We've touched on it already.
Yeah.
If we don't have a sterling-denominated stablecoin, we're all going to be using dollar stablecoins. So that's obviously one disadvantage. The other disadvantage actually is for kind of broader financial stability is the backing assets. So, of course, if you do have a systemic sterling-denominated stablecoin, then the likelihood is that the majority of your backing assets under the current regime will be, hopefully, UK government debt. Now, this is all then going to contribute to a much stronger British economy, and we need that in the current uncertain political and geopolitical environment.
Growth, inclusion, what would you like to add, Lisa?
Absolutely. So I agree with all of those points in terms of innovation, competitiveness, and ensuring that the UK backing assets are pegged to UK gilts debt, and that would only support the economy. What I would like to add is that there's a whole framework that does need to be put in place by the firms, by the regulators, and for industry to help guide that approach. And this is the purpose of the Digital Currencies Working Group at the Payments Association. We're here to help firms understand the different options that are available, that could be available for the end user, and provide benefits on all fronts. With stablecoins, the 24/7 settlement, if it's fiat-backed settlement arrangements, then that, of course, provides greater benefits. There's discussions around costs, benefits that could be passed on to the end user. I think that's still TBC, considering the interest and rewards discussion. But the final points that I would like to add is that we need greater discussions to help guide this path forward, and we need to start moving quite quickly, which we are doing. But then more needs to be done.
Would you like to add something on this?
Actually, one thing that's literally just occurred to me that I can't believe we've not mentioned as a use case yet is stable coins for use in agentic commerce as well, because I think that is a main use case that I don't know why we're not talking about this more, because it's there today. You can see all of the big players in the market.
Well, I think the regulators do not really know about agentic payments in general right now. I mean, they think about it, but there's nothing in practical terms.
I think that is absolutely right. I think because, and actually this is a theme, isn't it, that's come throughout the whole development of the regulatory regime as it comes to digital money. We're almost one step behind, as we need to educate not just regulators and supervisors, but also parliamentarians and wider in what the benefits of this new technology could be. And then once we've got there, then we have to then start designing the appropriate framework to put it into place. But you're absolutely right. I think on agentic AI, we're possibly even one step further behind in terms of understanding what it could unlock for the markets. There are obviously some quite tricky...
And we need stable coins for that. That was your point, right?
Yes, the point was that stable coins could help unlock that market, as could, I'm going to throw in another technology here, digital ID. I think if we have both of those things, and it's a bit of a chicken and egg, we need all of these technologies to mature at the same time, essentially. But once we have that, actually that could unlock and change the way we all do our shopping every day.
And yes, so of course you were mentioning AI, and I think AI is where we have to conclude today. Lisa, one last comment on that.
Yes, so in addition to agentic commerce, as Natalie was talking about, we should have the digital ID framework, and combined with all of that, AI and the AI discussions that we're having at the moment and the clarification, if you combine this unique set of arrangements, then agentic commerce will definitely take off in the UK and globally. We're seeing that happening already. The UK certainly needs to understand these are the frameworks and building blocks that they need to put in place in order to develop agentic commerce.
Hear, hear.
Fabulous. Well, thank you very much for joining me today. Thank you very much for all your efforts into leading or having led our working group of digital currencies. It's great to have two fabulous women leading this agenda. And I just can't wait for the next steps, which is getting it done. Thank you very much.
Thank you.
Thank you.